Okay, in the previous video, we talked about the basic of real estate, um, the characteristic of a real estate property, and the legal rights of a real estate owner. Now, let's talk about the terms and definitions that you need to understand in order to be able to know what your client as a real estate virtual assistant is talking about, and just to understand the basic things that happens in a real estate transaction. Okay, so the first thing is the buyer's agent. A buyer's agent is when your client is working or representing a buyer, yung bumibili ng property. Next is the seller's agent. It there's two things about them: seller's agent or listing agent. They represent the seller of the property. So for the seller's agent and listing agent, sila yung mga naglalagay ng property information sa MLS or yung multiple listing service provider ng agent or your client as a real estate agent VA. They represent the sellers. And one thing about as a VA for a real estate agent, if you are representing the seller, it's most likely that you will help your client in listing the property in the MLS and also market the property so that mas madaming buyers yung makakita na yung property is in the market na and ready to accept offers. Next is a real estate agent. There are three things that I got confused about before, but the real estate agent, they are the licensed agent to sell, represent, to sell a property, to list a property in the market, also to represent both buyers and sellers. There are some agent na license lang sila to represent a buyers, and there are some agent na license lang sila to represent sellers. There are a lot of types of agent, but most likely a real estate agent, they work under a brokerage. A brokerage is a real estate company na nag-handle ng agent in the States or in the whole United States country or county, but it depends on the company. But brokerage, I think it's the next one. Yeah, broker or brokerage is the real estate company where real estate agent work for. However, a realtor is like a real estate agent, but they can work independently. They can represent a buyer or a seller, even though they are not working under the brokerage. Because real estate agent, when they work, a real estate agent, when they work with a broker, the broker have a cut on their commission. Because real estate agent, they usually, they most commonly, uh, their salary is based commission based. So on their commission, sometimes it's only 3%. On their commission, the broker also have a cut from that. But a realtor can work independently, even though they can represent anyone, even though they are not working under a brokerage or a real estate company. Next is, let's go with the transaction process terms. Transaction process terms is uh, deals with the terms that is being used when there is a contract. There's already a contract between the buyer or the seller. So first is escrow. Escrow is a contract arrangement or a third party na mag-handles ng documents and initial payments for the security of both the seller and the buyer. Yung escrow, what do you call it? Yung escrow, ang purpose niya is for security, to make sure na walang may scam. Kasi there is a middleman. Yan. Escrow is a middleman between the seller and the buyer. They handle both the initial payment. There are two types of payment: the earnest money deposit and the down payment. They will either handle both of that and also the documents. And next is the title. The title is not um there's two explanation for title. There is a title company, and then there is the property title. First, title company, they are sometimes there is a transaction that will not require the escrow in, or if the title well, when that happened, the title company will handle the escrow. They will be the escrow. Sometimes transaction will require a different escrow from the title. So the purpose of title company is kind of same with the escrow. They handle the documents and the processes. If it needs like a legal thing, a legal document to close a transaction, it will go to the title, while the escrow is just a middleman holding the documents. The title, they work for the documents until closing. Um, there are documents that only the title will release in the transaction, especially most important thing that the title release and worked on is the closing documents. That is the document that stated all of the expenses or all of the payment receipt. They are the ones who handle the deed of sales, things like that to finalize the transfer of ownership of the property. Well, sorry, the tit the while the title, the document, the title is the title of the property. It shows who is the owner of the property, the exact location, the exact size, and things like that. This is the proof that the property is owned by this certain person. A deed of sale is a deed of sale is kind of similar to the title in a way, but the deed of sale is just conveying the transfer between the seller to the buyer. So the deed of sale is a proof that the transaction is completed, and there is a transition for ownership transfer. So when a buyer buy a property, hindi agad-agad malilipat yung name nila sa title. What they will have is just the deed of sale at first. And while they're waiting to finalize everything, some bank will require uh, some bank will require the buyer to complete the payment of the mortgage first before they release the title. So, the proof that the buyer holds in this time na hindi pa niya tapos yung mortgage is just the deed of sale. It has their name and a proof that that the the transfer of the title's name is ongoing. And residential purchase agreement. A residential purchases agreement is a contract between the seller and the buyer that the seller agree with the offer the buyer offered, and they are okay with everything else. If there are anything renovations, the purchase price, the closing date, every details about the transaction will be in the residential purchase agreement. And the next is the financial terms. Oh no. Yeah, okay. Okay. There should be more on the transaction process. But okay. Financial terms. First is the pre-qualification. The pre-qualification is about when there is a bank that pre-qualifies the buyer, and they tell them the amount that the buyer can have as a loan to purchase a house. For example, sa ibang bansa in United States, most specifically because I'm experienced in United States, when it comes to getting a loan, a mortgage, or any type of loan, they base it on credit score. We don't have that much. We don't really rely in credit score here in the Philippines, but in the United States, they base it on credit score. And the pre-qualification, if there is a good credit score, mataas yung makukuha nilang loan. So, mas makakapili sila ng mas magandang bahay. Like, for example, if the house that they are interested in is $350,000 and the bank only pre-qualifies them and up to 280, so kulang pa din yung pera nila. So they might have to adjust that. So pre-qualification is just uh, the estimate a buyer can have when it comes to having a mortgage with that specific bank. Different banks, different offers. And next is pre-approval. So the pre-qualification is just the estimate based on the buyer's information. A pre-approval is more it's more like the actual amount, not the actual amount the buyer can get, but the pre-approval when you compare it to the pre-qualification. Pre-approval means that there is a higher chance that the buyer can get the certain amount of money. If the pre-qualification says that they are qualified for 280 and they had some things to improve their credit score and they go back for another bank, they ask for a pre-approval or for the same bank and they ask for a pre-approval and they got pre-approved for example, 300K, $300,000, then the $300,000 amount is what they will send the seller as they are pre-approved to that amount, and that is the amount they can have, they can loan from that certain bank. And a pre-approval is mostly in transaction and in the sellers and the agent, they mostly require the buyer to have a pre-approval ready at hand before sending in the offer to a property just so that they are sure that this buyer have the money or have the capability to get a mortgage in that certain amount or that selling price of the property. So it's very crucial uh, when I'm working with buyers, I always make sure that um, we secure a pre-approval first before we go to writing the offer for a property. And then the mortgage is basically a home loan. So if you know Pag-ibig, Pag-ibig they have housing loan that's a mortgage. Principal, when you have a mortgage or a home loan, there is a interest. The principal is uh, the exact loan amount without the interest. So if the buyer loan is $280,000, the principal is $280,000. Although when they pay monthly and then you compute that, it might double or triple the price because of the interest. So principal is just the exact loan amount without the interest. Amortization is the way of gradually paying the mortgage. So if usually it's monthly, so that is the amortization. For example, it's the $280,000. Uh, sorry. Let's do my own mortgage. So for example, I have 500K mortgage in the Philippines. The amortization is the monthly payment. For example, my monthly payment is 3,000, then the amortization is 3,000 per month. That is the payment for the principal plus interest. Down payment. The down payment is the initial payment made by the buyer towards the property to the seller. Usually, down payment is also in installment, uh, but it's not really. Some banks, I haven't, I've encountered before a buyer that she applied for a loan to a bank, but the principal amount of the loan is 280, and the house, the down payment they need was, I think it was 3 or 10%, but it's somewhere in between. But yeah, so the down payment is also in installment. she got a different bank for the down payment, so it's easier for her to manage. So she have a bank for the principal, and then she have another bank for the down payment. Let me see if I have that. I don't think I do. Yeah, I think I missed something. Like I mentioned earlier, there are two types of initial payment when you are working with a buyer. The first is the um, earnest money deposit and then the down payment. I already explained the down payment. It's the initial payment of the buyer, and it's on the percentage of the sales price. While the earnest money deposit is like a trust deposit. Before you enter a contract, or the contract has been signed both by the seller and the buyer, so it's already executed, it's active. You will be give your buyer will be given, it depends on the seller, but usually 7 days to send the earnest money deposit. The earnest money deposit is not a lot of money. It's like 3,000, 5,000, depends. It depends on the agreement between the buyer and the seller. So earnest money deposit is just showing good faith, na it's just an assurance for the seller na yung buyer, they will pursue the property, they will continue, they really want the property, they really want to buy the property, and they will not back out after the contract has been signed. Because there are there are sometimes uh, uh, there are instances na kapag malapit na yung closing date, tsaka magba-back out yung buyer, which is not good for the seller kasi they already had expenses with the renovation and anything that might need fixing, and also the documentation fee. So yeah, the earnest money deposit is just showing good faith. It's not a lot of money, but usually it's non-refundable. So the buyer is given 7 days to complete the earnest money deposit. Next is the closing cost. The closing cost is it, it, it it's included in the closing document, all the expenses, all the fees that happened during the closing process, during the contract. Like if there are processing fee, for attorney's fee, everything will be in a sheet included in the closing document. HOA, like I mentioned earlier, homeowner in the previous video, I'm sorry. HOA is homeowners association. This is the homeowners association is more is like a regulation in a community or in a subdivision, and usually the homeowners association also require monthly fees. It depends on a certain community. Some will charge 250, 450, $450 per month, and that is to cover the cost of maintenance of the community, of the security guards, and things like that. Oh, okay. So at here nadagdagan lang siya. Nakalimutan ko ilagay kanina. So MLS is multiple listing service. That is where, one second. Hello. Okay. All right, let's continue. Okay, so MLS, multiple listing service or system, is a the MLS is a platform for real estate agent or realtor to access. Only the licensed agents can access MLS and then post listings that they have, and also market the properties they are selling. Contingent offer is an offer to purchase a property. Okay. A contingent offer. A contingent offer is a type of a document that protects the sellers and both the buyers in case something comes up. So contingent offer meaning they signed a contract, but the contract is not binded or not yet finalized until a certain um, criteria or a certain condition is met. Like for example, kung wala pang mortgage yung buyer and they send a contingent offer saying that the contract is not binded until the buyer secure a mortgage. That is a contingent offer. There are also other things for contingent offer, like for example, if the buyer requires home inspection before binding the contract, they can say that the contract is contingent until home inspection has been done. Listing price. Listing price is different from the sales price. Listing price is the initial amount offered by the seller. So it is the amount that you will see on the listing or on the MLS. And the listing price can go higher or lower depending on the negotiation between the seller and the buyer. Property tax, as I'm not sure if you're familiar, but I think every country have to pay property tax, and in United States it is also applicable to them. The property tax is the percentage of the property's value. It just depends on which state or country you are in. Closing disclosure is the closing document I've been mentioning earlier. So this is where the closing cost, uh, the transfer of the title or the deed of sale is uh in, and it is given only by the title company to both the seller and the buyer for uh to confirm that the closing process or the contract has been closed and the property is being transferred to the new buyer. All right, this part is more on different type of loans that you might encounter. So let me see 1 second. All right, so conventional loan. This loan is usually not insured or guaranteed by the government. So like it is with the bank, but they have a lower interest rate compared to the normal loans. VA loan is for veterans loan. Okay, let's continue. Ulitin natin. Okay, so conventional loan. This part will be more about different type of loans a buyer can go to and you might encounter when you are writing a contract as a transaction coordinator for a real estate agent. So first is conventional loan. Conventional loan is your normal type of loan, like a loan in the bank. So this is not insured or backed by the government, so they might require higher credit score, and also the down payment for conventional loan is also higher compared to other type of loans. Usually it's 20% down payment. Next is the VA loan. This loan is only eligible for veterans, those who serve in the military. There will be no credit score required for this type of loan, and also this does not require higher down payment as well, because this is backed by the government, which is the Department of Veterans Affairs. If the buyer is a veteran, they can get a house with lower down payment, and no credit score required, as this is the way of their country of or their state to help them. Next is the FHA loan, which stands for Federal Housing Administration, or FHA. I would say it's kind of similar with Pag-ibig. This is also regulated by the government, so they will require lower credit score, and also the down payment is lower compared to the conventional loan or yung normal type of loan. Hard money is it's not cash, it's different from cash offer. Hard money is a little bit complicated because hard money, the buyer will use the existing money that they have as a collateral. So, for example, their savings, uh, their house, but not exactly their house, but more like the money that they have saved up. They are not gonna give it as cash, but they will use it as a collateral. Home equity loan, or HELOC, is that type of loan that will use um, the property, or what do you call it? Or the possession of the buyer. For example, if the buyer have a house or a lot that they currently own, the equity will, or the loan will be based on the current equity or current value of that property. So if hindi sila nakapagbayad, masiseize or kukuhanin ng bank yung property nila as a collateral. Fixed rate mortgage. This type of mortgage is hindi tumataas yung interest rate, but the downfall of fixed rate mortgage is kapag bumaba yung interest rate, hindi rin bababa yung interest rate ni buyer kasi naka-fixed rate mortgage siya. Adjustable mortgage, as the name suggests, it adjusts depending on the market. So the interest will adjust depending on how the market is going in the certain state or area or in their bank.